Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
This is Share Shootout League. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. Now, are the latest sanctions against the Kremlin paving path to another Cold War? It's pretty serious stuff. How are cigarette sales rising when the product they deliver is one of the most dangerous known to man? And what impact will the second Argentine debt default have on the rand? Now, we don't know the answers to any of these baseless questions. What we do know is the Share Shootout League gets dirtier and tougher, as you can see from the results as to how Twitter decided last week for the match between Sasha, that's Bucks, and Nick, the value guy. Nick, the value guy's friends and fans came to his rescue in a tightly contested match. Nick, the value guy, moves to 9 points. Sasha, hashtag Bucks, is still sitting on 6 points. There are tears in the Narishkin house tonight. Gary, the running dog, used to be in the lead, but now he's got a cohort. Remember, you decide who wins this match and ultimately who wins the league. Just follow @SSO League and tweet any of the stock pickers hashtags. We don't ask why you vote. We just ask you to vote, and then we count them. Well, back to today's match, and this is a colossal match of the league. It's a meeting of the giants. No, it's not. Well, okay, we got one giant. Say it's the equivalent of Ipswich United versus Sheffield Wednesday. We have a man whose time as a market player is coming to an end for a while. The league's own runaway groom. He's up against a man, well, not really up against a man, he's above a man, who's lucky enough to find somebody shorter than himself to marry. I give you the players. It's little and large. It's Laurel and Hardy. It's Share Shootout League.
My name's Gary Booysen, Head of Trading with Vunani Private Clients. At the moment I'm experimenting with enhanced alpha trading. You almost go and find value, good quality companies, and then pick them up, hold them for the long term, as long as it's got solid fundamentals. You put hedges in place to try and get that little bit of enhanced performance. So it's a philosophy, new philosophy, but we're trying it out. So it's going to be interesting. I think lots of prep work. I mean, it's a very tough show because you never know what the other contestants are going to do. But we're going to have to really go and dig out some good opportunities for the viewers. And yeah, I think also throw in a few curveballs. Try and find something, some of the more obscure stocks that are showing value. So far, my biggest competition has probably been Mike Harworth and Sasha. They've always been tough to beat. I think I have a shot at it. I think maybe the track record has been fair so far, but it's definitely going to be tough. I just hope the audience is going to base their decisions on the quality and the performance of the shares, not just on the explanations.
My name is Clive Ramathibela-Smith, and I am the Chief Investment Officer of Inkunzi Investments. My investment philosophy is keeping to the fundamentals of investing, so keeping it simple and straightforward, stick to the basics and make sure that you create phenomenal traction from that. My game plan for the league is to make fun of everybody else and make sure that they get embarrassed at the end of the show so that I can win simply because I get public preference. My biggest competition in the show, and it has nothing to do with investment philosophy at all, it would be Gary, simply because he's tall and big and I'm terrified of him. I don't stand a chance. I'm going to win the league because I feel that I've got the right criteria and the right material to make sure that I win the league. I qualify better on the BEE scorecard, so I hope that will help.
Well, Gary is looking to keep the #1 spot, but Clive knows he can knock him off the top of the heap. The bigger they are, the harder they fall. So the #1 spot is up for grabs. Will it be Running Dog, or will K Live cause the upset? Now let's get to see who knows the rules. Do you know the rules, gentlemen? Well, just in case you don't, let us remind you what those rules are. It's not like you haven't played the game before. Each of these guys have pre-picked 3 shares, and only I know what their poison is. And during the show, each must accept at least one of their competitors' stocks. Each has got 30 seconds to argue their stock pick, and they can pick from the JSE Top 100, and also a whole bunch of international indices as well are available for them to pick. They can use their offshore allowance. Now we know the rules. Let's go straight into it. Size before beauty. Gary Booysen, you go first. In 30 seconds, it's an interesting pick because the luxury market is coming under pressure in some segments. We are seeing some of the global luxury brands take some strain. Tell me why you like and remain a fan of Richemont. 30 seconds.
Yeah, obviously you're referring to LVMH's results. Yeah, a little bit shaky, and that's obviously pulled Richemont back. That's exactly why I'm looking for an entry, because I don't think Richemont's going to be affected in the same way. The one quality it does have is a rand. It's an amazingly rand hedged company, which also with a stronger rand now, you've got a nice entry. And I mean, our base case is over the next few years we're going to see the rand weaken. Again, I don't think that Richemont is going to suffer too much in its sales. I mean, it used to all be about the Asian customers. It's actually diversified a little bit better now. And if you look at America specifically, that's where the opportunity is going to come.
And your time is up. That's where the opportunity comes. Clive, dare you shoot this one down? Because I am told quite reliably that you're something of a Richemont fan yourself. We just look at your snappy dress sense, and clearly luxury goods. It's a fake, I'm sure. Do you like Richemont? Yes, compose yourself.
I will compose myself. I do like Richemont's story, especially like Gary's just mentioned right now. Very good rand hedge, but most importantly is that the price has come down slightly in recent days. So that means that it is a good opportunity to buy at the moment.
Okay, it's a good opportunity to buy at the moment. Where is a price where it is no longer good to buy? Because a lot of people will watch the show, they'll think about it for a week or two, and then they'll go, you know what, those nice guys on Share Shootout League said, this is a good idea, and they go and pay $115 a share, which may be a bit too much. What sort of range are you comfortable?
It depends on the volumes, and that's what we do as investors. We look at what the range is within that particular stock. And if the price is right, you should normally see a downward curve.
Okay, but for kippies like me, who sit at home using some free internet site where I don't have data coming in and streaming in.
That's why you should call us first before you actually...
I want to do it for myself on my laptop, sitting at home on my private stockbroking account. Okay, and perhaps I don't have a great data service from them. What's a good price to be paying for Richemont right now?
Tough one, huh?
I know it's a tough question. That's why I'm asking it. While he collects his thoughts, Gary Booysen, what would you
at the moment, if you can pick it up anywhere above 100, you can see there's a defined channel on Richemont this year. So, yeah, 100 to 102 is a great price, we think. But again, you've got to take into account where the currency is trading at the time you trade. If you are looking at a longer-term trade, I think you can pay anything up to sort of 130. I mean, that's top of the range. But this company, if you're going to buy long-term, is decent.
No, absolutely,
you will not lose money.
But would you, I mean, you want to pay 100, not 130, Clive. Would you pay 130 for Richemont right now, though?
No.
Okay.
No, you wouldn't pay 130. Maybe Gary would.
We wouldn't because the ruling price is 102. But I'm saying, I think on a long-term view, there's 30% discount in this company.
Okay, there's 30% discount in this company on the record price that it has achieved. Anything around 102, 105 rand thereabouts is okay. Do you accept it at that level, or do you shoot it down?
I do accept it.
You accept it?
I do accept it.
I am
surprised. I have no problem with Richemont.
There we go. I like your matching hanky thing.
Thanks very much.
Just don't have a sneezing fit. it'll ruin the look. It'll ruin the look. Clive Ramathibela-Smith from Inkunzi Investments. I would like your first pick this evening, and I must admit to being quite surprised by this one because it comes from left of field. It's got a multiple of under 6. Usually that means a company is in serious trouble. Why do you like Telkom? In 30 seconds, starting now.
I love the new management structure. It's very, very brilliant. It's moved, Bruce, from March to now to where it's sitting at 49 Rand, all the way from at 29 Rand. That tells you that this stock is quite serious. I'm thinking that if you continue with the same momentum currently as it is right now, before the end of this second quarter, we will see the stock reaching the 50 Rand mark, which nobody actually expected. If you had gone in at the time when I advised on this show that you should go in at, then you're looking pretty
successful in retrospect. I have a couple of questions. I like Sipho Maseko, the chief executive. I think he's done some smart stuff. I think he's got good board support for change that needs to come in Telkom. However, I do get concerned when the CEO of a company has to go on a governance course. I do get concerned when the finance director is accused of wrongdoing and we still don't have, more than a year later, an outcome to some kind of internal disciplinary process that we've not been informed about. And then the CEO is accused of, whether he's guilty or not, but is accused of cloning number plates. Those are facts in the public domain. And you want me to buy these shares?
Hence the reason he's going for a governance program to help him to make sure that he gets the right number plates sorted out. But the most important thing here, Bruce, is that they've minimized on their Telkom mobile, that ATAR, that they've actually been able to sort that out. Even though there's not been returns at all from that, it was a very futile exercise.
You're using more than your 30 seconds.
Right.
Gary, I want you to blow this away with a blunderbuss.
Listen, like, I think, you know, when Telkom, what was the low? It hit like 11 rand?
11 or 12 bucks? You've done good.
So you're great. I mean, you got in there, you bought into a turnaround story, you happened to pick the bottom, wonderful, your returns are looking spectacular for this year. I think to dive in now, you're still buying a turnaround story, which I don't like to buy. I'd rather go and find something that's doing well. Yes, they've cut costs out of the business, but there's also there's a lot of competition in the local market. Vodacom obviously buying Neotel. There's also regulatory concerns for me because they're going to open up that, the last loop, which has always been Telkom's sort of, you know, saving grace almost to an extent. Now, if that opens up and Vodacom becomes a fixed line player as well, I mean, now suddenly you've got a serious competitor in their own markets. I'm not going to back Telkom. I still think that, you know, if you look at, you know, it's like still struggling with a quasi-parastatal. I think they're going to struggle against an inefficient player like
in
Vodacom.
30 seconds, try and convince us.
In fixed line, Telkom is still by far the most strongest. You can't get that wrong. And so even the infrastructure, even if you have to change the infrastructure, you have to
get it wrong. I would bet on Telkom.
Okay. Do you have a Telkom landline in your home?
No.
Do you have a Telkom landline in your home?
I don't.
There we go. I'm the only kippy in the room. But that's not the point. The point is you guys don't have Telkom landlines in you. It is no longer an absolute prerequisite. The corporate market has gone to Neotel. Neotel has gone to Vodacom. These guys need a miracle. You've done well. I would say you should sell it, Clive. But you want to buy it? Gary? I smell gunpowder.
I would shoot that down immediately.
You're taking you down.
Take it off.
You've been taken down, being brought down to size.
See, I'm going to need my handkerchief.
You are going to need your handkerchief. I knew you brought it for a reason. Gary Booysen on to stock pick 2. Now this one does surprise me because it is a stellar South African company. It's a massively diversified industrial conglomerate. It goes from strength to strength. It's got a rand hedge element in it, courtesy of its food services business, which operates in the Pacific Rim region and in the United Kingdom and parts of Europe as well. Bidvest is phenomenal, but it's run hard. In 30 seconds, why should I buy it now? Go.
It doesn't, yeah, I mean, I agree, it has run hard, but I mean, like you say, a spectacular business. It's one of probably the last conglomerates that there is. I mean, now that you look at everyone sort of, you know, like the Anglos and all that, you know, focusing on one core business, but they're still pulling out massive synergies. I mean, they still, you know, the businesses that they acquire, they're an acquisitive business. They manage to get in there, they buy an underperforming business, they turn it around, and they've released shareholder value. They've been doing this for years and years, and there's no reason to think it's going to stop. Their ROE every year, it's plus 20 consistently for the last 10 years. It's a fantastic business.
There we
go.
You
can buy it.
You may not have any extra time. Can you shoot down Bidvest?
I can.
How?
Certainly. And you know, it's going to sound very true, but the amount of purchases that they've made, I think in the long run will start to eat down on the profits. That's the first thing. The second thing that I think about Bidvest is that I think it's reached saturation. I think it's reached its max. I don't see how they can grow further from actually a PE ratio of 17 at the moment. So I'm hoping that this will be good enough argument to actually be able to shoot down Gary.
Okay, no, but this is, I mean, interesting one, because Bidvest, of course, in the South African market may very well be permeating every aspect of our lives. You dry your hands in the bathroom, you're being dry, your hands are being dried personally by Brian Joffe. There are very few ways to escape Bidvest's influence. However, there is the global growth opportunity, Gary, and that is where it is interesting. The Bidvest food services business internationally, I told the story the other day of how I came out of a pub where Peroni was being served. There was a Nando's on that corner over there, and coming past was a Bidvest food services truck. We've recolonized the United Kingdom. And the fact is that they're big and their trucks are driving all over the place.
No, that's it. I mean, if you look at it, Bidvest, it's about, you know, if you compare local to offshore, it's about 50-50 if you look at in revenue terms. So, I mean, there's no question. I mean, huge in UK, Europe, and a little bit in Australia as well. So, looking at it, I mean, the food service business, that whole food business, they actually consolidated that with with the idea that they were going to sell it off or unbundle it from the group. But honestly, you know, Bidvest has always been, just to address your sort of acquisitive, it's actually been a fairly low, it's always had a fairly low gearing on it.
And that's been the genius of it.
Yeah, because they've always wanted such cash generative businesses that keeps their gearing low. They've done it well, and honestly, I think that food service business is just making too much money for them give them for them to actually unbundle that, because it's too good an asset.
Are you excited about this again?
So excited!
So excited!
It's also pulled back $10. It's an
shoot it down.
I shoot it down simply because he's taller than me.
You shoot it down. Okay, it's a lousy reason. Okay, then let's go online. Let's go into the world of intangibles. Let's go to a place where we don't know how these people make money, because you think that's a better idea. In 30 seconds, Twitter.
Twitter, 38% up since listing. Not only that, they've been able to do some great things with their marketing. I don't know if you've noticed your Twitter account. I don't think anybody
keep
here
messing
does
with it.
Sorry. They're now starting to advertise, and in actual fact, they have Bloombergs and the likes actually utilizing that platform. People don't go and do market research now with people and interact. They just go on Twitter and they get the research. So I think this is a good prospect, and I think this stock is certainly something to have in your pocket.
Okay, there we go. And your 30 seconds aren't even up yet. The music plays. I love Twitter. I absolutely adore Twitter. I spend a disproportionate amount of time on Twitter. And do you know how much money they make out of me? Absolutely nothing, Gary. And that's the problem, isn't it?
Yeah, it is the problem, but it's going to be, you know, like I don't know if I'm going to shoot this down or not yet. I mean, like you say, like the earnings potential there is huge because of the audience. And I mean, you look at that and guys will pay a massive premium for that. If you look at Naspers, for example, you look at, you know, Google, Facebook, all of these things. I mean, the audience that they're speaking to is their real asset. They just perhaps haven't turned it on yet, but I'm sure they will be able to. The risk is that when they turn it on, does it become unpopular? Is there an alternative product?
But that's the problem.
Because it's, like you say, it's an intangible. It's something that, I mean, you know, even Google, I mean, they're searching. If there was a better way of searching than Google, it could flip that quickly that all you have to do is type in a different URL and you're at a different place using a different service. It's not like financial services where you have FICA requirements and it's impossible to do it, buying houses. I mean, this is not something that you can switch easily. Twitter, you can switch off Twitter very easily. Still, I don't think it's going anywhere. Personally, I do like the business.
You like the business. Now, Clive, a quick argument from you while Gary makes up his mind as to whether or not to slap the little bird on the head or not.
Well, first and foremost, you're competing with the likes of Facebook, for example, and what they've done in a short period of time. You can think about Alibaba, who's also just now hunting for somebody else to partner because they've got a massive exposure to direct consumer. You need to speak to people. You need a medium to do that, to drive business, and I think there's no better way than Twitter to do so.
All right. Gary, are you going to feather this nest, or are you going to wring its neck?
You're right. You do need to compare it to Facebook, and I prefer Facebook. So looking at Facebook, at least, you know, they're buying things like WhatsApp that at least have, you know, $1 a year that they earn off their millions of consumers. Like I say, Twitter is nothing. I'll go Facebook.
But I don't know about you guys, but I mean, and I'm sorry, Mr. Twitter, but when the tweets come through and you get these promoted tweets, I block them.
Yeah, that's
because they take up space on what I want on my Twitter feed. You gave it to me for nothing. That was the promise initially, and now you pollute it. And the moment you pollute it, then I zone you out.
It's exactly what Mark Zuckerberg is saying with Facebook. He could turn on a lot more revenue, but he chooses not to because you don't want to lose that cool aspect of I'm not being bombarded by marketing material. So I don't know. I think Twitter might struggle. I still like it as a business, but yeah, shoot it down.
It's a lovely business, but how does it make money? And that's the problem. Gary, he's shooting you down. So Clive, so far you've been shot down twice on Telkom and Twitter. I do hope your last pick passes the heady heights of Gary's very picky nature. Gary Booysen, I was surprised when he so easily went for your Richemont pick. I really was, but he did. The Bidvest group, I was surprised that he so easily shot it down, but he did. That's where we stand at this particular point. Who will win and who will be blown away by the wind? Will it be Running Dog, or will Clive eat his lunch? Clive maybe eating humble pie. We don't know. Nor do you. You need to stay here so that you can make an informed choice, and you can tweet us during the show as well. We like the tweets, we're just not so sure about buying the shares. Back in a moment. You're watching Shootout, League right here on CNBC Africa, the only league without shin guards. We're in the bare knuckle fight zone here. Remember, this is match day 15, and by the end of this match, this is the league that will not look the same. Although all about Twitter votes, this is your opportunity really to change the standings. These stock pickers want you to change the standing on the league. Gary wants to regain his lead, and Clive just wants to be noticed. So you follow either Runny Dog or @Clive, and you can pick one of them tonight to be your winner. We've got Gary Booysen, who's chosen Richemont and the Bidvest group. Richemont accepted, Bidvest shot down. Clive Ramathibela-Smith from Inkunzi Investments. Telkom shot down, and Twitter, I just saw feathers fly as Gary blew it out of the sky. That was poetry, and you didn't even know it. Your final pick this evening, Clive Ramathibela-Smith, and you better hope that Gary's in a good mood because he needs to accept it.
Yeah.
In 30 seconds, the chief executive of this company says projects because he's from Australia. His name is Mark Kirifani. The company is Anglo American. Why do you like it in 30 seconds?
Oh, what a well-diversified company, Bruce. Brilliant management. I thought this guy, when he was brought in new changes, and actually the market felt it. And I think that's part of the reasons why they're selling some of the assets, because they know that they need to be a lean, mean machine for them to grow forward and grow the business. So I think they're more of a diversified company than all your other mining companies. But most importantly is the fact that the business is growing strong in terms of profit lines, and even in South Africa, they're not afraid to make decisions.
Okay, and the big decision, of course, is to sell off the Rustenburg assets of Anglo American Platinum. Say, you know what, somebody else can manage this problem. Off you go. They word it differently.
Absolutely.
But Gary Booysen, I see you nodding. I see you prevaricating. I see you going, well, if I have to, I'll take it.
If I have to, I'll take it.
Why don't you like it?
No, I mean, Anglo is difficult because, I mean, I think it's got components of its business that are excellent. I mean, it's stake in Kumba. I mean, Kumba's an asset that I think is phenomenally oversold. But, I mean, you can get exposure to Kumba directly without having to go via Anglo. Obviously, there's a lot of question around the platinum assets. Do they really want to sell their platinum assets now? I mean, there's obviously a stigma hanging over the whole industry, especially the Rustenburg assets after the strike. You know, the platinum is still in the ground there. You know, do you really want to just give up and almost, sell out at what I would think they're going to get a very low price for them? So perhaps, I don't think that restructuring there is perhaps the best thing for Anglo to do. It's obviously, if you look at, its operations in Brazil, I mean, it's the massive overrun of costs at Minas Rio.
That's historical, however.
It is historical.
It's previous management. Mark Kirifani's in to sort that out.
I do take Clive's point. I mean, when Mark Kirifani first joined Anglo, I mean, the share price jumped, I think, 8% on the day because, I mean, the market is very impressed. And, I mean, he comes out of Anglo Gold, so he's, he's good. I think he has the potential to turn it around. The only if that I have about this is global commodity prices are coming off. Is China going to maintain that demand? I mean,
China is growing at 7.5%, but it's engineering 7.5%. Yeah. It's engineering its growth lower. It can grow faster if it wants. Yes. Recent GDP figures out of the United States showing 4% growth in the first quarter. There is activity in the global market. Not enough to keep you happy. No,
I'm not questioning. Okay. There's definitely activity in the global market, but the thing that has driven this commodity boom is infrastructure spending in China. Just because you have economic activity, it doesn't relate purely to higher commodity prices.
But you have to pick a share. And out of the three shares that have been presented to you this evening, do you find this one the least offensive?
Out of Twitter? Yeah.
Do you wish you'd taken Twitter?
I do. I'm starting to wish I'd taken Twitter. But at least Anglo has earnings though. Twitter doesn't. So I'll take Anglo.
Okay.
I'm happy to take
so
Anglo.
You have a little bit of buyer's remorse, but you're taking it.
It's run hard as well. I'll take it $20 lower than this, and we can pick some.
Okay, $20 lower than this would make you happy. Yes. But unfortunately, there are people waiting on the sidelines for the market to collapse for the last 5 years, and it hasn't happened yet. That is the risk, of course. Gary Booysen, let's go into the final stretch with you this evening. And Clive's going to find it hard to shoot this one down. I wish him luck in trying. Marcus Jooste, Chief Executive of Steinhoff, is doing remarkable things with this company. Do tell us why you love Steinhoff in 30 seconds.
No question. Obviously, it's a P of 11, which is difficult to find on the market at the moment. But really, I mean, it's activity in Europe, buying the Conforama, all of that, and really betting it down. You're going to buy in now just ahead of its Frankfurt listing. It has, changed a little bit because it's, traditionally it's the opposite of Bidvest. It's a very highly geared company. They've brought a lot of cash onto the balance sheet, I think, to appease the Frankfurt investors. But really, this is a number 2 retailer, furniture retailer in Europe. And I mean, the strategy is to go and take on IKEA and become number 1. The biggest growth opportunity, though, is probably 5 years down the line when it moves to China, where it sources all of its stuff. If it can get retailing right there, This is the next SAB.
Okay, -2 points for 40 seconds, but it was interesting.
Please make sure.
Clive, you got to like the company. You've got to like the appetite. You've got to like the sense of adventure. You've got to like the commitment and the passion. But do you like what you have to pay for it?
The most important thing here about Steinhoff is the fact that they've got really serious global footprint, and that you can't argue. My question would be, especially in the South African context, is the fact that with recent consumer pressures, will they be able to sustain the same type of growth locally here? Do people still buy luxury furniture? Do people still want to put themselves into more debt? You know, so that would be my view in the South African context, but definitely across the board.
This is not a South African company.
Yeah, it's
and
not.
that's the point.
I suppose that's
this
the point.
This is a European company. You can argue
Yeah.
that Europeans might not have much more disposable income as much as they might have had 5 or 6 years ago. However, it's at a price point in Europe where it competes with IKEA. And I don't know when last you went to an IKEA. But the place is mad. I mean, it's bedlam. My 6-year-old wants to go to IKEA because it's fun to visit. It should be banned. If Steinhoff can get that right, if they can get kids wanting to go into Conforama and drag their unwilling parents along,
absolutely,
they've scored huge. And that's the point, though, Gary, isn't it? I mean, that's why Steinhoff has got an interesting battle on his hands.
Yeah, definitely. I mean, Steinhoff does focus more on the online business than IKEA, and that's where we think IKEA is really lagging, because you go, like you say, you go into an IKEA store, you want to go and sit in their little rooms made up for you and all of that. Whereas Steinhoff, you know, it's focusing more on the online sales. But I mean,
we need to wrap it.
The real strategy.
I'm convinced. Real story in 12 seconds.
Sourcing in developing countries, China, India, South Africa, and selling in high-margin countries like Europe, UK.
I dare you to shoot it down.
Can't shoot it down. You
know, you have to be very insane for me to, at this moment, accept Steinhoff. You have to be. I'm shooting it down simply because he's taller than me.
Okay, there we go. Yeah. I mean, we're having heightest issues this evening on Shootout League. These guys are gunning for the #1 spot. They're both relentless on the Twitter streets. So be it a tweet or a retweet, we'll take it as a vote, and we'll be counting them until Sunday midnight. These guys need your votes. Put on your best smiles. Best cheesy smiles. Begging cheesy smiles. Vote for one of these guys. You either vote for @KLive, and that, of course, is Clive Ramathibela-Smith, or for Running Dog, who is losing the edge in terms of the league stakes. Catch us again right here on CNBC Africa next Tuesday, 8:30 for match day 16. Another fabulous scrap and bare knuckle fight before we crown a winner of the most unrelenting stock picking show on TV. Until next week, stay cunning. Good night.